My guest market monitor this week is Mark Leibovit, Chief Market Strategist for VRTrader.com, and welcome back to NBR. Mark.
Thanks for having me, Paul.
Your strong and long-standing theory has been that changes in volume precede changes in price for stocks. As a matter of fact, the VR in your VRTrader Advisory Service title stands for volume reversal.
That's correct.
So I ask you, Mark, has this two-day rally on Wall Street convinced you there has been sufficient volume reversal to have changed the market from a bear to a bull?
Paul, it's way too early to come to that conclusion. It's maybe short-term bullish. Yes, we've had a VR here. Yes, there's negative sentiment. Yes, we're in the time frame for a bounce, and you don't want to fight that. I think we could rally here a little bit, but to come out and say this is it, it's the beginning of the bull market, is still way too soon.
What would it take for you to convince you that it is a bull market?
Well, first of all, we didn't get as low as I thought we were going to get, so that's part of the problem, but we'll talk about that in a moment. But also, it's a function of time. I want to see some time pass here. If it's, let's say, mid-December, and the market is still holding its own, and there's still positive volume and breadth, so assuming we're not substantially higher, which I don't think is the case, then I would feel a lot better that the bears could not exert their influence, and we're heading up, and it's still going to be a continuation of what we've seen. But until that point, you know, I got to be a little cautious here and say, yes, we can trade higher, but to jump in and say, this is it, it's too soon.
What is the downside risk for the Dow, for example? What was your original target? You didn't get to it. What was it?
Well, you know, we had different targets, but I'm thinking and have said for the last few months, 5,000, and it doesn't have to happen right away. You know, this could be a little cyclical bull in a secular bear, as they say in technical parlance. So, you know, we could rally here 1,000, 1,500 points. Remember, off the July low, we rallied about 1,500 Dow points, and then we found ourselves back down. So we're 1,500 points higher in the next few weeks. Let's see what the market does at that point. Because really, Paul, if it's a bull market, there's plenty of time to get in. As a trader, we were long coming into today, and what we did today is we sold, took some profits in the BBH, which is the biotech index and the mid cap. We took some profits here coming into a weekend.
Okay.
But, you know, still, you know, doesn't mean we won't trade it. On the other hand, to say we're going to jump in and invest, that's another story.
Let me go back to April 12th, your last visit with us. You were very bearish. The Dow was around 10,200 and NASDAQ around 1755. And you said we're in a bear market and it's going to get worse. You were right on. The only thing you liked were the golds, which had a good run-up since. I hope you took some profits because they weakened. But you still like the golds?
We took some profits and we bought them back.
Okay. Which ones? Newmont and ASA Limited and Goldcorp?
Absolutely. Goldcorp, Lamas Gold, Royal Gold, the whole list.
All right. You gave us a very good tip. Short Scholastic. It was around 56, went down to 35, now 46. Is there anything you're shorting now? Did you cover your short?
Yeah, we're out of that.
And you like some of the oil-related stocks like Transocean Offshore and Schlumberger. They went up right after you recommended them, but then they came down below your recommended price. You still with them?
No, well, we're out of them now, but I still like them philosophically. It's interesting, the oil and oil service seem to be tracking with the S&P, so you're going to have to like the market to be in those stocks.
You liked AT&T back then. Quickly, do you still like it?
I would say no until I'm convinced the Dow has turned big time.
So you still like the golds. Anything else? We just have about 40 seconds.
Well, I would say the golds are the play. I would encourage investors to look at the index funds. Picking stocks is becoming a harder and harder endeavor. So I would look at the ETFs, the exchange-traded funds, either long or short. Right here, again, on a trading basis, on a little pullback, you could probably buy them. But I would say be careful. That lower number I gave you in the Dow may exert itself here in the next few months.
Last time in April, you did not like the NASDAQ Qs, and they are way down. Not time to buy them yet.
As a trade, maybe. In fact, they hit my target. As a trading vehicle only, to jump in and say this is the move, it's the same comment. Be careful. Trade them, but don't wear your welcome.
All right, so a very cautious Mark Leibovit. Don't run after it is what you're saying. Don't chase stocks.
Don't chase, but if we got a couple of weeks here, fine, but outside of that, don't wear your welcome.
Okay.
Thanks,
Mark,
Paul.
thanks very much.
My pleasure.
My guest, Mark Leibovit, Chief Market Strategist for VRTrader.com.